I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So world markets continue to be subdued as Europe grinds lower and Asia is mixed. And a reversal in the Nikkei has our futures higher after 5 down days. So, Scott, do you think there's been real damage in world markets?
There's been some bending, but I don't think damage. Same way with our markets. We've been correcting, but nothing's been broken. It's almost like just an apathy towards what's been going on here. And if you look real quickly, we like to look at the Japan to see what's going on there for opportunities and for a little bit of leadership. Look at the move that Japan's had. Okay, starting way back in November, it accelerated in the beginning of the year. That was your May 22nd outside reversal day. Pretty harsh, pullback, but look at the size of the move it had. We talked about this red dog reversal then. Fast forward, it's been consolidating for the last, 5 months, and now it did break above this recent downtrend, and it's flagging really nicely. I think Japan is holding up pretty well, okay? So with that being said, if you have some money and exposure to Japan, I think you keep it there. And if you're looking for some momentum, above 1205, and then that May 22nd, pivot is very close in front of us.
What about Asia, which has been weaker but gained some footing over the summer?
This also has been in somewhat of a corrective phase. It maybe came back a little bit more than Japan, but it also had a much more sizable move since the summer lows. So if you look here at the FXI, which is a mixture of some Asian markets, you will see that Asia's been in a downtrend ever since pretty much the start of 2013. Remember, everyone was talking about the crash landing. Anyway, here's that double bottom over the summer in June, July. You had a higher low, another higher low. Here's when it broke above that downtrend and gave you some follow through. So now, it's getting a little wishy-washy up here, rightly so. Okay, look at the size of the move. So you look a little closer here, and I would think that, some might try and put a little bit of money to work at the 8-day, the 21-day, which I think is a good idea, especially if you sold into some strength. But I wouldn't go all in. I would go a little bit right around here, and then perhaps, this will be an area to watch. But really, major support, I would think, comes in at this trend line, the gap, and the 50-day moving average. So maybe tier 1 right here, tier 2 for what could be, a bigger move or some exposure over the long term, whether it's first quarter 2014 or beyond.
So turning to our markets then and the S&P, is this the day that we can finally turn after 5 down days?
It would be nice. Every day or the last 2 days we've been coming and trying to find that red dog reversal where we trade through a low, come back above it, and then get some kind of rally. And recently, you've been able to buy some weakness. But if we rally and then you add to it late in the day, kind of fails and you ruin your prices and you probably give back money, but you don't want to miss a bigger move. So it's this conundrum here. So you look at the chart though, and you'll see the reason why. We've had a really big move since the start of November, okay, which touched this trend line here in June after this breakout failure, and this breakout failure led to an almost 5% decline. Then, also made new highs after it, so it was viable. Then here, another breakout failure. Let me just show you it a little bit closer so you can see the actual pricing. Came in right here when it broke above 1698, consolidated lower, and then led to what? A 4% decline into the trend line that got resumed right here for new highs. So here is another potential breakout failure. The question is, how deep does this one retrace? So far, 40 handles quickly. But so people are saying, okay, could I buy here in front of the 21-day, or does it come lower to retest some bigger areas? So nobody wants to get rolled, ran over basically. So with that being said, futures are up a little bit today. If they go negative and trade through 1691, you then have your 21-day at 1687, and then you really have bigger support right here around that gap and at the 50-day. So maybe a lot of people talking about this being a spot that probably could happen, but we'll see. And then in order for the market to maybe get back some of its momentum, it needs to close above this 1701, which comes right in here. So at this point, a lot of wait and see as far as the S&P.
Well, speaking of red dog reversals, as you mentioned, some of the banks caught a nice red dog reversal yesterday, namely JP Morgan, which outperformed the sector, 2.7% gain and closed on highs, so perhaps some continuation today.
We were looking to find some footing. First thing first, the ETF, the XLF, you will see, quick red dog reversal right here after failing to make new highs, showing some skepticism in the power of the banks. You had a little red dog reversal yesterday when it went below 1999 and closed back above it. So, so far, if you put some money in there yesterday, that was that tactic. But like you said, JP Morgan's been the hot number, or where the headlines have been because of all the pressure and all the billions they've had to pay back. But ultimately, you had a little topping pattern right here where you could have exited, and then one right here. So this head and shoulders pattern that everyone has been talking about, if it triggers, it could create a lot of downside. That's why yesterday we said, not all these trigger, especially JP Morgan coming into big support. So for me, I looked for a red dog reversal at 50.30. So those on the virtual trading floor saw, actually, when we talked about it, that was my entry right around there. They saw it go green on the VTF, so they were able to execute on their strategy at the same time as me, and that's what the virtual trade floor is for. I also held it for the majority of the day, and I have a little overnight. And we'll see, kind of get up here and fill this gap. So resistance would be 52.40 to about 52.60. So that would be that tactical trade. And then with time, we're going to have to figure out if some strength can negate what's been going on here. In order for that to take place, it's going to have a lot of work to do, and it's going to take time, and it's going to really have to start getting above this and above this right shoulder in order to show some new resumption in strength. But right now, so far, a nice tactical trade, and we'll figure it out.
Let's also take a look at Citigroup, which had a red dog reversal yesterday as well, but couldn't really pick up some upside momentum.
Yeah, well, it went green, and it was a trade, and that's what people are trying to figure out. Do you have a little trade here, or is it a swing? You look at Citigroup, and you will see this also. Came down quick, little red dog reversal at 49.93. Closed okay. I think if we want to bounce, is another potential trade here before worrying about new highs. And sometimes you don't always get a new high trade, so it will have to clear this, which is about 49.54, and then you have a big gap here. So we'll see what happens. Can Citigroup bounce with the banks and at least fill this gap so this big gap here doesn't control the next direction? And if you look here, you have a pretty big trend line in place, that you wouldn't want to see it really break below yesterday's low. So far it's hanging by a thread.
Bank of America has been hanging in there as well, holding where it has to, but above what level could it pick up some upside momentum?
I think it's got to get above like 12.25 just to get out of harm's way. This 11.98 to 12 is big support. If it breaks below it, you could see some downside. And you go here at the chart, you'll see, it's had a really nice trend, and we've talked about this so many times, and it's had a lot of nice moves along the way. We talked about this in the beginning of the year. Remember that $10 awesome trade? And then here was another one when it got nice and tight after a corrective phase. And then this was one of your last juicy trades right there. Now it's been in this channel, and it's been a little wishy-washy. You take a closer look here, and you will see that it's still hanging in there. It didn't make a new low, so this actually sort of a tiny bit more strength. I would say if it gets above this, perhaps it fills the gap for a trade, and then we're going to need some overall strength in the market for this to get back on its horse. Okay, so if it were to break below this, that's what people are scared of, and while they're not taking a lot of size here, it could come into 1387 or 1360, but ultimately, I would think that this would mute any downside, and positioning for this into what could be a really nice move again next year might make sense.
What about Wells Fargo? Had a red dog reversal at Tuesday's low of 41.70, but couldn't find much upside momentum above 42.
This looks okay also. With all these banks, just pick and choose which one you want to go with. You don't need to have all of them.
Right.
A lot of people choose Wells Fargo as basically more of an investment vehicle because the trades aren't so clean. You look here, it held some decent support. It did reverse. So it does have some room. I don't see any bank, Brit, overall, outshining another one. Except for JP Morgan's been the weakest because of all that headlines that have been taking place.
You just have to go with the one where you feel the most comfortable with its action, the one you feel the best.
Right. You know the speed, you know the chart, you know the price, you know the levels. So this way, you're just like a child of yours. You can measure when it's sick, when it's feeling well, and you could know how it's acting, so you could act along with it.
Right. All right. Well, coming up, we're going to go in the trenches with high beta tech, which took a break yesterday. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with High Beta Tech, which took a break yesterday. Apple struggling to hold the gap from the iPhone news, but as things get worse for BlackBerry and those handsets come off the shelves, perhaps this could be a boon for Apple.
Any little piece of news could help, especially when you're talking about the stock that's so sensitive to headlines. And with BlackBerry leaving some shelves, less alternatives. But overall, you would have thought that even that the demand and the news about the explosive sales, which everyone is still skeptical on, could have had it acting a little bit better. But anyway, the chart here is kind of holding on by a thread as far as its constructiveness. This was a really nice move back from earnings when it gapped up and continued. Remember that event day? That was right here. That's pretty much when I stopped looking at it as a swing trade. And then, here it held where it had to. So while it held where it had to here, as you look at some of our names, you will be able to come back to the chart and see that you had a nice bounce. So with that being said, the low here, 481.43, is your pivot now. Okay, still in the upper end. Like if you want to treat this as a big upper channel, so to speak, and you want to expand this, you will say that even though it's been a little lethargic up here, it's still in the top third of this range from the low. So with that said, it's up a little bit today. It's going to have to start getting above this 489 in order to then put back on the on the agenda of perhaps breaking this downtrend for a better move higher. But right now, still not great intraday action. I would trade it a little less, but know where your pivots are because that's made some money for people.
And then there's Google. Couldn't find support at the 100-day, dropped 1% to close on dead lows. So should we brace for more downside action today?
It depends on what type of trade you're looking for. I came in this week super bullish on Google. I even said this could be the next $1,000 price stock, whatever, but then the pattern changed, and for me, who's super active, it changed for me. Okay, you had a really nice bull flag coming into that Monday. Remember, the Dow was down 185. It closed over 900, but then look what happened. You take a look at the chart, you will see this was coming in on Monday, right? Didn't it look really good coming in Monday? Here was your descending trend line or descending channel, broke to the upside. Looked pent up right here. Nice little flag. Usually a 3-day flag gets you quick continuation. That could have happened, but didn't. Next day, it broke. And that's what happened. If you look right here, you will see, boom. Next day it broke. My stop was 895, and I haven't traded it really since. So here we are. I would say if you did get out at 895, maybe you could see some kind of tactical action area around 875. But this new high trade was taken off the table with this. But rightly so, the market got weaker. So anyway, if you're invested in Google and you're still, this channel is still strong and it's still in the middle end of it, so it's still hanging out. So with that being said, just know what you're looking to get out of Google, and as of right now, it's not a momentum to the upside trade. And if it were to break below this area, then that'll be another decision you need to make. But right now, the active momentum move got taken away.
Well, in this corrective phase, we still have some of the same leaders setting up and making new highs. We've got Tesla and Facebook opening at new highs.
Yes, you do. And these trades haven't changed. They break out, they consolidate, they go. They break out, consolidate, they go. I could probably do a little song or a rhyme like that. Anyway, with that said, that's what trends do if they continue. And you look at Tesla, here you go. Boom. Look at this really nice trend all the way up through the highs. This was your last one last week when it broke above, flagged again. Looked good yesterday with relative strength, and now, above yesterday's high of 186.90, and who knows, maybe this thing hits 190 today. But overall, look at this trend. It's been strong. Only once did it go below the 21-day, and that was when Goldman said it was worth $80. Look where it's gone since. Great job, Goldman. Anyway, so with that said, still strong, still on its way. Facebook, same type of scenario. Really nice trade ever since earnings. You had a lot of entries. You had one right here, one right here, one right here. And then I even tried shorting it yesterday, and it just didn't work. I lost money. So if you're trying to short this and you're in the pain trade and you're rolling it up, be careful. Try not to pick a top. Picking tops are costly. You haven't even seen a red dog reversal to the negative yet. So anyway, with that said, opening above 49.66, I wouldn't be surprised for it to touch 50. But if you didn't buy it at all during this entire move, I would take a look at your process if you're first buying it above 50 or near it.
And then there's Netflix hovering around the 8-day yesterday, closed around the flat line with a small gain. What would you say the key level of support is that it needs to hold right now? I'd
say 298 to 300. As long as it stays above that, rebuilds a nice level, works off that ugly candlestick. I'll show you in the chart. This was an ugly candlestick back on Monday where it opened up at highs and then engulfed this entire move, but it's hanging around. So with that being said, if you're still in it, it hasn't changed. But if it were to start getting below 298 and breaks below it with some kind of potency and volume, then maybe you get a little bit more of corrective action. So that's when you'll have to measure your commitment. But the longer it stays above this, perhaps at some point when the market regains its footing, it too can go again. But at this point, no real setup.
And LinkedIn took a break after its move on Tuesday that helped it get back above the AN21 day. What would you say that it needs to break above to get back in motion?
About 250. Let this go above 250 and it can continue. Really nice day 2 days ago when Facebook first broke out. Inside day yesterday. It was upgraded today. You look at the chart, very tight. So there is a pattern here. Gets above 250, holds above it. The recent high here is 257. And I do think at some point this does get taken out again. What an unbelievable stock. You look at this stock. We've been talking about this thing for 2 years. Every naysayer, valuation guy has been saying, oh my goodness, the PE's high, the valuation's high. But meanwhile, the best way to get winners are winners that have good chart patterns, really nice trends. And remember this cup and handle pattern that we talked about, one of the three amigos? Well, this cup and handle pattern triggered, okay? And look at the size of the move. And I think it still has a lot of life left in it.
All right, let's do some quick hits and talk Zillow. Stuck in a downtrend for the last 4 sessions, broke below its 50-day yesterday, saw a 3% loss. Is this the next potential short setup?
I think it already declined, so now it's hard, but this is a good example of a momentum name that does have a high valuation that when you see a subtle change, you have to recognize it. And you go here to Zillow, you'll see, a lot of people are thinking in this upper flag, it could break out. What happened? It couldn't find that momentum, broke out, failed. So right there, if you were playing it for a breakout, you got out of the way. And then if you said, okay, I'm going to give it some time, hopefully you were looking at it closely after that day, and then pow, broke below, engulfed this whole thing, so that could have been your out. Now, overall, I still think it's okay. It's just not really a momentum play for now. In order for it to get going again, it probably needs to get back above this 93. And then you also have to watch the low here. So overall, momentum has left this name, and when momentum leaves, you just got to notice it because sometimes it doesn't come back. Just like real quickly on this XONE, when momentum left this name here, and this was a big time momentum name, look how the huge move, you can't just buy it and think it's going to come back. This trend line changed this stock for now, and now until you see something blatant, I would just stay away from it, and that's how you know whether a strong trend changes in a high valuation story type stock situation.
Well, another 3D printing stock, 3D Systems, Triple D, hovering near highs and above its 8-day. What level does it need to get above to make another leg higher?
Just another new high. This hasn't really stretched like you would think it would stretch, but there's a lot of divergences in that group. Overall, though, looks good. We talked about this long channel and wasn't the easiest breakout whatsoever. Okay, but it's still trending. It's still above all the moving averages, so it still looks good. Last pivot high here is 56.23.
And Las Vegas Sands, another little break yesterday, lost almost 0.3%. What do you think here?
Unbelievable group. We went over this 3 weeks ago, and this breakout's been strong. It's been every time the market wants to rally, it's one of the first ones to go. You look here, this was your core trade we talked about. Remember over the summer in August, the markets were down 3 or 4%. Didn't see that happen here, showing you relative strength, and then look, it took off. Now it's a little harder to buy up here, but as long as it stays above the 8-day, I would stay with it. Just be careful just trying to fade it. I know a lot of people were trying to fade it right here like I did, but didn't work, got away from it, and now it's still trending with some of the other casinos. Hopefully you have MGM in the draw because that thing's over 20.
And let's just check in on gold. The GLD tagged on almost 1% yesterday, trying to break above that downtrend resistance and get the gold bugs excited.
Yes, and right now I think some traders are excited, but I wouldn't be bugging out if you're a gold bug because these levels don't mean much yet. In order to get some power back in this thing, it's got a lot of work to do. Here's that blood in the street low. Then, this was a really nice tradable trend till it broke. And then let's just take a close look here as per Fed day. Okay, this was your Fed day move. This was your doji, and then it broke below. So if you got out and you were looking at it, you said, okay, let me try it. Some guys caught a little bit of a red dog reversal right here. I got some thank yous on Twitter saying, oh, I bought GLDs when it went back above 127.33. Great trade. And then we talked about if it broke this 2-day trade, it could bounce. But still, it's almost negating the power of this down move. And really, I guess if you want to take a look at this, you could say this is some kind of descending channel here. And in order for the bugs to get really excited, it's got to trade above that Fed day high and then hold above it. And then it's got another obstacle. It feels like gold's got obstacle after obstacle after obstacle. That's another one. So right now, it's just a pretty much random trade here with a little bit of opportunity. Just don't let it be the focus of your day.
All right, so as we navigate this day today and see if we can finally turn around after 5 down days in a row, what will you be focusing on?
Something I haven't been focusing on enough has been the individual names because they have been acting well. A lot of traders in my row have been doing a good job with that. I've been trying to find this bounce in the indices, and the indices have not done that yet, so I've missed out on some opportunities on some of the leaderships that stocks that have been moving well. So at this point, I'm not going to get away from it. But just know overall we've pulled back 2%. There's a lot of apathy in the trade right now. I've seen this happen before where they wear everyone out, and then all of a sudden, out of nowhere, the trend readjusts and continues, which has been to the upside. And then you miss it because you tried it way too many times with probably too much size during the grindy times. And then again, just don't go all in without the signal because there is room down to the 50-day, and we've come a long way. So that's why I think there's a lot of question marks right here versus people taking big stabs or stakes, especially ahead of what could be a headline-driven weekend with Washington and the debt ceiling and you name it. Traders don't like when headlines control the tape a little bit.
All right, and with that said, happy trading. Have a great day.